Okay, let's go ahead and get started. Welcome to the Wednesday Client Support webinar. This is a webinar we hold every Wednesday at this time, and this is for the live presentation is for our clients only. While we do record these, the recordings we also share with the general public, but the live presentations, as you know, are for our clients. Purpose here is for you all to ask questions and get any of your unanswered questions that you may have had that have come up during the week answered. And we do that in a variety of formats where we can actually show you on the charts, etc. And also, too, with the Trader's Assistant, Trade Size Calculator, any of our other software that you're using, feel free to ask. If you're in our home study courses and you're having trouble with a access situation, let us know, okay, so we can help you here as well. So while you guys are thinking of your questions, I will go ahead and start a couple of things that I want to talk about, and then we'll go ahead and get to that. All right, so let's take a look first at the chart in front of you. This happens to be on the eSignal platform. We're going to look at a variety of charts on Ninja and TradeStation as well. And if you have a question and you want me to look at your chart, please let me know what platform you're on so I can key on that because you'll be able to see it right on the platform you're using as well. Now, this is a stock called PAM, P-A-M. It was on one of our pick lists, so I'm going to just go over it a little bit here. Everybody that's had the weekly trading picks have had a chance to get in on this already. So we're going to share this and just go over some of the things on it. Now, as you can see, this is a daily chart. I'm going to talk a little bit about multi-time frame analysis here. So this is going to be a great example for you to see how to use different time frames, and you may have questions on that as well. So as you can see here, I've drawn in some Fib retracement levels. And these retracement levels are basically based off a wave at the bottom here, wave 2, right here. And then we moved up to here. So if we get our pen out and we go ahead and show you exactly where 3 is based on this. This is 3, okay? This looks like a nice 4 put in here. And we're going up here now to 5 into an area here where we'll draw soon, the Fib extensions. All right, we started our wave 2 here. All right, and there you have it. So we ended, wave 4 ended down in this area here, right on the high probability area for a wave 4 retracement. Okay, and so now we're moving up, and at any time you want to take a bullish trade here, you should be in good shape. Now, as you know, markets don't move straight up, so they zigzag. So you're seeing that here in this movement here up on wave 5. So you have to make sure that your stops are put appropriately. Now, I would imagine what's going to happen is when this particular leg down stops, we'll probably get a pyramid trading point forming in here, okay? And at that particular point, you'll have an entry up here if you decide you want to take this trade. If you wanted to get on it a little earlier, if you were sure that this was a wave 4 bottom here, then you could have technically gone in here, but you would have put your stop down here. So that's the only time we let you override the pyramids is when you are able to put your stop down below wave 4 and you're entering here when it clears a key level of resistance like it did on here, and you have a bullish owl. All right, very important to have a bullish owl. You have a yellow PTF, which is fine. We just don't want to go long on a red PTF. And you have a green-colored trend line master, which indicates that we are still above the major trend lines here. So this is a go to the upside. Now, if we remove the Fibonacci retracements that we use to establish that particular move to the downside, the next thing to do is let's take a look at the higher time frame and see what's cooking on that. And so if we go to the weekly time frame, we get a little bit different scenario here. Notice we've had a wave 3 down, all right? And let me get my pen here. So we've got a 3 down here. And if by chance this was a minor 4 here and major 3, then this count is looking good. So it looks like to us we might have been in an A, B, C correction up into this area here, and then we're going to get one more leg down. All right, that's the highest probability forecast at this time. So if we take a look at that, there's a couple things we know. We're trading C-wave. Now, it's okay to trade C-wave. That's okay as long as C-wave's on the higher time frame, because that will develop into an impulsive wave on the lower time frame, which is what we're seeing, of course, on that daily chart. We're obviously going into a wave 5, so we're going up to this area here. There'll be 5 waves in that. We'll get to the top of C here. So we've got a green PTF, so we're going a little higher on this correction, and we've got an uptrend in place for the correction itself. We broke the downtrend line here for wave 3. So that's kind of what we're looking at there. And let's erase these lines here. And we're looking at a retracement level of 7.82 to 10. So now let's drop back down to the daily chart. So 7.82 to 10. And here's the retracement lines from that other area here. But let's go ahead and take this off, okay, and kind of get an idea of, if we can, where the retracement extension area is going to be for this particular move up. So we want to go here to here and then put this at the bottom here. And notice we're seeing 7.04 to 8.43. So we're falling in a similar range to what we're looking at as a corrective top on wave 4 on the weekly. So this is this is in what we call in sync. So the next question is, in terms of taking the trade, is going to be dependent upon where you get in. You know, if we get in up here, if a pyramid forms here, and you get in here, all right, you really don't have that much room before you get into a possible target zone, which could be anywhere from in here too. So it's a little bit, I like to get in a little earlier, so my risk to reward is at least 2 to 1 on that. However, if it gets up to 8.73, then you've still got a nice trade here, because you're going to be getting in just under 7. So, you know, small cap stock. So basically, nothing wrong with taking the trade. If you decide you want to get a better position size and take it down here and put your stop here, you certainly could do that as well and then take the trade initially right now. All right, so there's very few times I basically say get into a trade without a pyramid except off a wave 4. We do consider it there, provided we can put our stop below here and still have enough trade size. So any questions on this? And in the meantime, I see some coming in from Randy. How you doing, Randy? Okay, Randy's asking, do you have an automated software program? When you say automated, what do you mean by that? Okay. Like Trader's Assistant, okay, but automated. Do you mean a situation where the trader system would import or download data? The answer is no. The mapping, the field mapping for importing data from either a brokerage or someplace like eSignaler, they change. They change the fields, and so therefore you have to remap them. So to put in mapping software like that, it's a huge undertaking. The other issue that you need to really consider, though, is that the whole point of the Trader's Assistant is for you to really get in touch with your trading. And part of that is actually getting out there and actually putting in your trades manually so you can actually relive them and learn from them. So there's a lot to be said from that ability of having that manual entry in there. So that's kind of where we're coming from on the Trader's Assistant. While it did replace the paper cards that we used to use and do some of the calculations for you easier and faster, the actual trades still need to be put in. And it's not a bad idea to do that for one reason, which I already stated, but the other reason, too, it allows you to check your brokerage statement instead of just importing it. So that's important, okay? If they make an error, you'll import the error, and you won't really take a look at it. Okay, so there you have it. Okay, let's move on. Anybody else? Okay, while people are thinking of questions here, let's move on and take a look and see what we got cooking on Ninja, if any. All right, so let me go back up here. I think I got a question just coming in from Victor. Hello, Victor. AGU on a value stock, where would you get in? Well, let's take a look at AGU. Let me just talk a little bit about IEF, which is what's in front of us here, and then I'll move on, Victor, to AGU. Okay, so if we look at IEF here, we can see a fairly clear oscillator and Elliott wave pattern. So if I get my pen out here, this is 3, the bottom of 3. Okay, so this, one good thing about this is as far as the learning experience, notice where the owl went negative, all the way from here to here. Okay, this negative owl, even though you had deeper prices here and the owl was deeper over here, this does not correspond to a wave 3 bottom. The bottom is over here. Okay, the bottom is always where the lowest price is. Okay, that's important. Now, the oscillator never went above the 0 line. Okay, see? So that means that this entire move was wave 3. Okay? And because prices are at the lowest point here, that is wave 3. And notice you had bullish divergence building inside wave 3 as we get ready to go into wave 4. Then wave 4 comes, all right, and we have a bullish owl, which we would have on a wave 4 in a bearish trend because wave 4 goes up. You have an ABC correction to the upside here, all right, probably something more like in the lines of this. Okay, put C wave 4 at the top here, and now we're moving down to the downside. So these are great trades to take for a short trade at this time, and that's one of the reasons why I'm sharing that with you. So if you wanted something to do right away for this week in terms of a short trade to take advantage of this particular trend down, this is a good one. And you've got a nice entry here, and you could just put your stop right at the bottom of that pyramid, and I think you'd probably be in pretty good shape. Again, if you wanted to be a little more conservative, you could put your stop over here at the bottom of 4, but your trade size has to be lowered. Your position size has to be lowered quite a bit to account for that. So just I'll let you guys use your judgment on that, but that is a nice clear signal. You got a nice downtrend in place on the TLM. You got a yellow precision trend filter, so that's not hurting you any. And here you've got a negative owl, so you could take that short trade. Question for you, all right? Take a look at the PTF here, all right? What's when it goes from yellow to red and red to yellow, what does that mean? Somebody out there. We'll use this as a little bit of a learning experience. And while I'm doing that, I will answer Bill's question. Hi, Bill. And we'll take a look at a Fib extension level here, rather. So since we got wave 4 in here, we'll go to Fib extensions. All right. And we'll put 2 here, 3 here, and 4 here. So we're looking at a level here, and let me get my pen here. So we're looking at a level here of around this area here. $68, and this will be 1 down here. Okay, so nice move to the downside. 4, 3, 2, 1. Got to work on my freelance penmanship here. Okay, so there you have it. Okay. Okay. All right. So red to yellow. Okay. Repeat the question. All right. I'm focusing on the precision trend filter, and the question I have is that, and that's this second filter in here. Okay. Now, if you guys, some of you may not have this indicator. This is an add-on. It's not included with the ART software, but you can purchase it at any time. But I know some of you, many of you, most of you, I think probably have it at this point. So I just want to go over it with you a little bit because it's a pretty cool indicator. And basically, what I was asking is when it goes from yellow to red, what does that mean? And then when it is red and then goes back to yellow, what does that mean? And then is it working properly? That's the question. First question is it's right 75% of the time, and 25% of the time it's not right. So in this chart that we're looking at, is it right? Okay, red to yellow, the low is in, the PTF work successfully. That's correct, Steve and Randy. Yes. Okay. All right. So all answers are correct. GH, the only thing I want to add to that is that I want you to look at the yellow indication on the PTF is a neutral indication versus a bottom end, because it can represent a bottom, but you can also have a market trend with it being in yellow. That's why I don't mind taking a trade in either direction if it's yellow, because it just means it's neutral. Okay, it's not really giving an indication bad or good. When it is red, what it's indicating is whatever price bar created that red, and in this case it started here with this low, it means that we have a 75% probability of prices eventually going lower than this, which really means that the overall trend is not over yet. All right. Now, it of course means that you could have a correction. You could have a wave 4, for goodness sakes, and still have a red PTF. But it just means the impulsive trend is not over. Look at it that way. And as you can see, what happened is it came back up here, and then it went down here again. But look what happened. It stayed red again. Okay, and the reason for that is that the oscillator got to that lower band. Okay, and so therefore it kept it red, meaning it's not over yet. We still got one more leg down. So then we had a correction, and then another leg down, and as soon as prices cleared that low here, it went yellow, which means that it's going neutral. And so when it goes yellow like that, again, it just means that the momentum that created the particular price where it is was not significant enough to have the precision trend filter indicate either a red or a green, depending on the trend direction. So it's just basically saying the momentum was not as severe as it was before, but you know, you can also have trends go on for a little while with average momentum, and then all of a sudden the momentum comes back. So that's why, you know, as this thing sells off again here, okay, over in the right-hand side of the chart, we may see this go back to red. Okay, it's very possible. So it's kind of good to understand it in those terms. So whenever you have a red go to a yellow or a yellow go to a red, that's indicating it's working properly. The only time it's not working properly, and you will see this around 25% of the time, is when it goes from red to green, okay, or green to red, okay? And it did not do that here in this example, but we'll probably come across one, and when we do, I will show you that. Okay, so let's erase these. And now let's move on to Victor's question here, or chart he'd like me to look at. And Victor, let me just focus in on that, and that was AGU. Is that correct, I think? And you are using TradeStation, I believe. I mean, NinjaTrader, I believe. Okay, so here what we have, this is kind of an interesting one. We've had a beautiful trend to the upside, okay, and now what do we have here? Okay, well, here we got a situation where if you take a look at enough history, you kind of get a little bit clearer picture. So here we got a 3, okay. Looks like we may have had a 4 down here, all right, and now we're ready to move back to the upside, all right. So we're going to have to clear some hurdles here, okay. At this particular point, this trend line is keying off of these 2 points here and here, and basically you've broken one of the major trend lines down here. So you could go ahead and look for a long position, provided the owl's positive, and it is right now. All right, and that's the way I would play that. We had bullish divergence here, big oscillator here. So at this point here, it looks like probably prices will climb again. We may have had a significant bottom in here, and so you just wait for the next P pyramid. That's green color, and take that. So when you have a correction like this and you think you have a bottom in based on the Elliott wave, then that's going to filter you from not taking any of these P pyramids, okay? Because you basically don't think it's going to go lower. And you know, this was a pretty dramatic move to the downside. Let me just erase these for a second. This is a pretty dramatic move here. Look at the elongated price bar. So the fact that that has held and prices got above that is a very bullish signal. And also, usually when we get a dramatic sell-off like that in a downtrend that's going to continue. This is going to be red down here, and it's not. It remained yellow. So that's kind of an indication of a pretty major bottom there. All right, so that's the way I would look at it. So the next question, Victor, on yours is, when would you get in? Okay, and the answer to that is I would either wait for a green-colored P pyramid and take the next green pyramid and go long and set your stop under that. I think you've already had wave 2 in on the upside. So if this is 4, then we've had 1, 2, and now we're probably getting ready to go to 3, okay, 4, and then 5. And we'll make a new high. We should break above here, which is 3, so this will be 5. All right, so I would take the next green-colored pyramid. That would be my answer to that one. Good question. Okay, Bill's asking, what causes the PTF to change from a red to a green? What is the trigger for the color change? Well, anybody want to answer that before I show them? Well, I think probably you guys are typing it in, but I'm going to jump in here. All right, do you see these two lines here on the PTF? It's an upper and lower, okay? So upper and lower. And this is what we call, this moving line in here is what we call the oscillator, okay? All right? So obviously, okay, what we look for is penetrations here, Bill, between the upper and lower. And so here, notice we got lower here, all right? So that is going to create a, and it happened on this price bar here, when it went down. See, it went from here down to here. So what it does is it actually puts it right here because that's the beginning of the price bar that caused it. All right, so that is your penetration area. Same thing with here, okay? So that's the way it works. And then when it gets above here, that's what happens there. So it's a penetration of those upper and lower bands. So it has to do with the actual momentum versus the price level itself. Okay, you're very welcome. Good questions. Okay, any questions out there from anybody? Victor, you got anything else? I know, Victor, you were learning your way around the NinjaTrader platform, and how are you coming on that, and are you getting the hang of it? A little bit of a learning curve whenever you start out with a new platform, of course, and a new set of indicators. But I'm just so glad that everybody's coming to our Wednesday sessions, because this is where you get it hammered out. This is how you learn about it, and eventually you get all the moving parts, so to speak. All right, good. Let's take a look at gold. Now, just so you know, because we got some new folks here, an ETF is an electronically traded fund, and it is an index, can be an index, on the particular sector that it is attached to. So the Gld ETF basically is the gold shares. And it's a very popular and easy way to trade gold if you don't want to trade the actual futures market. So ETFs trade just like stocks, and that's why they're so popular. And what you do is basically enter and exit your trades just like you would on a stock. Now, if we look at this, we can see we're in a downtrend here, okay? And it looks to us like, we'll take a look here, looks to us like at this particular point that we have a wave 3 here, okay? And we have a green PTF, so I'm not too confident in that because it looks like we're getting ready here to break below that. I don't think I see a nice ABC pattern here. Let's bring out the Fib Retracements and see how that worked. And so if you notice here, we did just get into the Fib retracement area, so the minimum requirements of a retracement have been met. So this would be, basically on these, I would take these short trades even though the PTF is green because the pattern is so clear, okay? This being a 3 and this being a 4, and we're starting on 5. The only time here we may be incorrect and the PTF could be correct is if this actually is a complex correction and really we are not below the 3 yet, so we can't say. But if it's a complex correction, then what this could be on a situation like this, and this is not what I would say is the primary wave count, but an alternate wave count, an A, and we could be working on to this could be a B here, C, D, okay, or this could be a more elongated type of correction. So that's possible, but I think the higher probability correction on this is 3, 4, and 5, and the PTF is incorrect on this one. You got this in sync, you got this in sync, and you had a pyramid here, so the nice short trade there. You could have taken a short trade here, but you got stopped out on wave 2, which is always the problem when you get on that first leg down. That's why I say even if you have a pyramid trading point stop in place, okay, here or here, if you went short here, again, to be safer, this is the one time I let you override it and put it on 4, okay? So the stop should always be there for a conservative best effort stop. However, the sacrifice is because the stop at that point is so far away from your current position that your trade size will be smaller. And in some cases, it's too small to make sense for the trade. So in that case, you would have gotten stopped out, on this one here. You would have lost about 1%, but then you would get another entry here, okay? So sometimes if you get in too early on wave 1 on a new trend and you get stopped out, just hang with it and take the next one, because that'll get you in on wave 3, okay? So that's what I'm looking at here. So now based on this, we'll erase this, and let's go ahead and erase these here, okay? And let's take a look at a fib extension, because while we answered the retracement question, let's get a price target zone now. Okay, so if we do that and roll this up here a little bit, then of course we see a price target zone for this in here for wave 5. Okay, now I'm going to say a couple things with Elliott wave. All right, there's oodles and oodles of books out there on the Elliott wave, and some of them are like school textbooks. They are very complicated. They give you all the calculations, retracement levels, and you can spend a long time studying that. In my new book, which is coming out in the 2014 in the first quarter, it's going to be a great book for those of you that want to learn how to use the Elliott wave without having to bother with all the calculations. Because what we've done is we have basically taken a lot of the guesswork out of it with you through indicators, okay? As long as you can use what we call the modern approach, which is using the OWL and using the PTF and seeing clear wave structures, you really are void of having to go through minutia of details, because the bottom line is that this indicator here, the OWL, if you're going to use Elliott wave, is absolutely indispensable, because it takes the guesswork out. It gives you a confirmation that this is 3. We know that we have a possible wave 4 here, so it gives you confirmation of that. And then the next thing to do is to make sure that the retracement levels are in sync, and then you're good to go here. Then, of course, you got wave 5 developing here. So that's the way you want to look at Elliott wave. You want to do it fairly quick. If you have to spend a lot of time analyzing, then chances are it's not that clear of a pattern. You need to move on to something a little bit more clear, okay? All right, so let's move on here, okay? And that one was for Rob. Hi, Rob. And CLF for Randy here. Let's take a look at that. This is another one of my favorite setups, these here, okay? They come at the end of a long trend to the downside, all right? And so basically here, on this one here, what we do is kind of wait for the long trend to end, okay? Obviously, if you can get in on wave 5 anywhere, fine. You take it as long as there's enough move left. But this is a bottom here, okay? And so now we're moving to the upside here, and that's what you want to take advantage of. We're getting in early enough here. You're getting in early enough here that you're going to have a nice move when it finally does it. So when you get in on something like this, okay, you've heard me talk of momentum trading, and this, we always basically as short-term traders, even when using the daily chart, we're momentum traders, okay? So when you talk about momentum, you're talking about two types. You're talking about the momentum on the current swing, all right, or wave, or you're talking about the entire, trying to capture the entire momentum of the impulsive wave. Now, if you're trying to catch the entire momentum of an impulsive wave, then you have to be more careful of stop placement than you do on the current wave. And so what do I mean by that? Well, let's just move this stuff over here and take a look. All right, for example, like on these little moves up, okay, you can try to capture profits, get out. You're almost scalping these little waves up. And sometimes we do that. We'll get out at the end of a wave 3 instead of setting our stops far enough back to be able to trade or not get affected by a wave 4 and then get out at the end of wave 5. Sometimes we do that, sometimes we don't. Now, in a case like this, if you were able to get in here, okay, on this, all right, and you could put your stop here, and you knew that you had a pretty confident count that you were in at the end of wave 5, all right, then you want to wait until wave 2 finishes, and then the next time you move your stop up will be on another pyramid that forms after wave 2, okay? That'll keep you in the impulsive wave. All right, otherwise you would have been stopped out on this one here, on this pyramid here. All right, let me just move that in a little bit closer. Hopefully we can see that so you don't have to struggle looking at that. All right, so, otherwise if you got in here, okay, then your stop could go here or it could go here. All right, then as you move up, you trail your stops up because you're trading the momentum of that trend, which is okay. And actually that would have kept you in the whole thing. But if you had gotten a pyramid up here, all right, and got stopped out, all right, then wave 2 comes, you might be in a position here still trying to get in. Whereas if you kept your stop below here until you're sure wave 2 is in, then you're okay. Does that make sense to everybody? Are you following that? Okay, good. So the idea is when you start out on a trade, try to determine where you are in the Elliott wave count, because if you're in a 1, you're going to handle this a lot different than if you just finished a 4, okay? All right, good. All right, let's move on. Let's go to USO. And this is the ETF for the oil market. Look at this. I want to point out something here. Look at this pennant that was forming here with these trend lines, and then you had a break above it. That's when those pennants form, the market absolutely explodes, okay? Retracement level, okay? All right, good. Anybody else? DE on a daily. So here's DE on a daily. This actually, okay, is an interesting chart, and what's interesting about it is the fact that it looked as though, let me get my pen, that this originally would have been this, okay, this, and going to 5. I mean, that's how it looked originally. But then, okay, what happened is that this, let's just check the value of this, 5.4. All right, so this looks like it's got a higher oscillator here on an uptrend. So it's kind of a strange one here, all right? And now we've gone into more of a complex correction. So if that's the case, probably should break out to the upside. We do have a green PTF still, so that means there's a 75% chance of getting above this high here, which basically was back on June 30th of this year, and that had a high of 95.6, and prices are at 85. So if you get an entry in here, we're starting to break certain levels here. Let me get my pen again here. Notice that this price bar here has taken out some of these key levels here. All right, so that's a good sign. So I would take the next long trade that you could on this. All right, that's the way I would do that. You have a bullish owl, green PTF. You've got this trend line that's bearish way up here. All right, So you do need to clear that before you're out of the woods. But based on this count and these two things here, you want to get a good entry. It's worth the risk to take it. Okay. There are exceptions to everything. Okay. There are exceptions to everything. It takes experience to learn when to use those exceptions. So until you have that experience under your belt, stick with what you know. Okay. For example, all right, it's my experience that makes me not pay attention to the red TLM here, because everything else is kind of a channel that gets broken like this after a complex correction is usually a pretty good way to catch the next significant trend, which would be up, and this will be a wave 5. Because if you can get in here early enough, then that's enough, quite a bit of profit there for you to take off the table. All right, but you're not going to know that unless you've been doing this for quite some time. Okay, so that's kind of the way you have to look at these type of things, and you'll develop times where you will take a trade and maybe have 2 or 3 of these going your way, but maybe not all 3. But based on the setup, it warrants you taking the trade. And don't forget, when we say take a trade, it's not all or nothing. All right, we're still doing our risk control. So if we're wrong, we're going to lose 2%. And that's an acceptable amount to lose based on a system that wins 60% of the time and has a 2-to-1 ratio. So you're okay there to take the trade. If you get stopped out, it's not going to kill you. So, you got to evaluate when it's okay to take that risk, and just understand if you use risk control, then you're probably going to be just fine. Okay. Any other questions? Good session. We've got a few minutes left. We covered a lot of material today. This was a really, really good one. Great question from Bill Baker that just came in. Are IPOs suitable for momentum trades? How long might you wait for a pattern to emerge? As a general rule, I do not trade IPOs. There's not enough history, obviously, with an IPO for me to make a charting interpretation of what to do on it. Facebook was a great example. It came out. All right, let's take a look at Facebook. It came out and dropped quite significantly. All right, right from the get-go. But now it's starting to develop enough history, enough patterns. All right, so basically here, yes, this was an initial drop down, but at that particular time here, all right, you really have to wait for enough history to see that this is, for example, all right, in the beginning, if you didn't have all this stuff to the right of the chart, if you were like right here, okay, you would have thought this was a 3 and this was a 4, okay? You would have been looking for possibly lower lows. But once more history started coming on, now we've got a little bit more effort here we can look at. And this basically is really where the wave count starts here. Okay, so this would be a 1, 2, and now we're in a 3. Okay, and in a 4 of 3. All right, so we got more room to the upside. We just kissed this 3.8, which makes things a little interesting because technically you've met the minimum requirements from a Fibonacci standpoint for wave 4. I do see an ABC pattern in here, and I'll draw that in just a second. Okay. All right. However, it's still also possible we could get this and then this. So we could have a B here and a C here, which makes this tricky. So what do? Well, you go with a couple things here. One is, all right, let's assume we take the assumption that this is a wave 4 bottom. All right. We still have a negative owl, so we're not trading to the long side yet. PTF is neutral, so it's not hurting us. Okay. We got a green trend line, so we're all set with that. If we took a bearish trend line and just manually drew that down here, you broke that. Okay, so this leg, all right, has been broken to the downside. The $1 million question is this leg A or C? Now, if it's C, then this would have been A, and this would be B. All right, if it's not C, all right, then this would have been a 1, 2, 3, 4, 5. This would have been an A. We're working on an A, B, C, B. And then you'll have another 1, 2, 3, 4, 5, C. Okay? So those are the two wave counts that are possible with this. And you need to realize that because nothing is ever a slam dunk. So what do? Well, in this case here, we're going to wait it out a little longer to see if that owl goes positive. Now, if it does go positive and I get a pyramid for a long position, I'm probably apt to take it because, again, if I want to try to catch wave 5, I need to get in at least early enough. So I'll go with the assumption that wave 4 is over, knowing that there is possibly an alternate wave count, but I'll use risk control. So if I don't make it on this time, I lose 2%, and then I'll wait and try it again after the pattern completes. And that's the way you got to look at it. Now, if it starts to take off and we get a pyramid here and prices start to move up and we break this B wave, this point here, then that's a good sign because that's usually a confirmation at that point that we were right, that this was an A, B, C, and we broke this because even if this was a and this was B here, chances are you're not going to go above that wave on B wave on a new pattern. So you'd be pretty good shape at that point, but you're not going to know until that happens. But you have to weigh out the fact that you're risking 2% and go with the probabilities. Okay, and there's times when there's two alternate wave counts and you just need to realize that and may be wrong. Okay. Now, if you get a pyramid that forms way up here, all right, then you've got to do your fib extensions and see if the risk to reward makes sense. Okay. Or if you haven't had a wave 2 yet of any significance, then you got to also remember you may want to put your stop under here because if you're getting in here, you may be getting in on the top of wave 1. Okay, and you'll get stopped out on wave 2. All right, so a couple of things to consider, and that's again comes under the clarity of the pattern. So you may at times identify correctly what the wave count is. All right, let's say we're correct on this, but the entry's not as good as something else we're looking at. So in other words, you may be looking at something else, see another wave 4 entry, but you got a nice pyramid here, a bullish owl, and you can put your stop under here and still have a good trade size. So that's a preferred trade versus something like this. So this is why you're going to have trades that are better than others, even though the patterns are kind of the same. Okay. Great one. Good questions. All right. Well, we covered a lot of ground today. All right. So very good session. We're coming up on the end of an hour. And again, I think the key is look for clarity. And it does take time to look for clarity, but that's what you're getting paid for. Okay. And if you show up at something and you got to scratch your head a little too much to figure it out, or you have to go look at so much history to make sense of it, then probably you need to step back and find something a little bit cleaner. Okay, that's how I would place that. All right, well, good. Well, we'll be back here next Wednesday. I want to wish everybody, as we get into the holiday season here, a happy holiday. And thank you, Bill. Yeah, good session. I agree. And if the recording hopefully came out good on this, we'll get that posted. We're posting these recordings on YouTube. We have a YouTube channel. And so that's where they're going, so you can view them there. And yes, Bill, our session is tomorrow. Bill and I have a consultation. He's signed up for private consultations. And so tomorrow we will have our session. And if anybody else is interested in private consultations, you certainly can give our office a call and talk to Jean, and she can talk to you more about those. They're really good. They're helpful. And basically we cover stuff like we do today, but then tailor it more specifically to what you personally need to know, okay? All right, good, excellent. All right, good, Dean, good, excellent. Well, Keith is on here, so you and Keith actually are already on here, but okay, so there you go. So I had forgotten that you were both on in the same session, so good. So excellent. All right, well, Dean, thank you. Keith, thank you. Bill, thank you. Victor, thank you. And Steve, thank you. And GH, thank you. Everybody, great. So have a good week, and we'll see you back here next week.